ahead.
All right. So, as you might know, I'm doing this interview for a personal project for my school. And my project deals with revolutionary economic crises, their socio-economic
Hmm.
impact on modern day economics. And I will be making a series
Okay.
of videos dedicated to five selected crises. So, I'm nearing the end of my research, and I feel like this interview would be a good conclusion to it. So, if you have any
Happy.
questions
Okay.
about the project, you can ask them. If
No, I don't. I don't know what the five crises are that you've identified,
oh,
but I will learn that.
all right. So essentially, the five crises, they are the Great Depression. They Another one
Hmm.
is the 1997 Asian contagion, which happened in East
Hmm.
Asia concerning Thailand. Then we have
Hmm.
the post 9/11 economic stress, and then we have the Great
Hmm.
Recession in 2008, and I'll be also covering the COVID-19 recession, which is still ongoing. All
Okay.
right. So, I'll ask my first question right away. So, being so economically informed, according to you, what has been the most ravaging global economic crisis from a socio-economic perspective?
I would make the argument that the Great Depression and its after effects probably were the greatest economic crisis, socioeconomic crisis, geopolitical crisis that we have witnessed. Because ultimately, what I believe that it did is it led to the Second World War.
All right. But the Second World
You
War
had
did
you
end
had
up solving it,
monetary.
right?
Well, I would not call war as being a solution necessarily to the crisis. I think as a consequence of war and therefore the destruction of the capital base in Japan, Germany, much of Europe, but the United States having the ability to retain its capital base given its geographic proximity, it had the ability to lift the rest of the world out. It also created the formation of international institutions in order to try to preserve peace and economic prosperity. I don't think we have seen an event quite of that magnitude. And while COVID has certainly had a substantial economic impact and yet to be seen, right, in many respects, given that the unevenness of that crisis, right? In advanced economies, it was addressed pretty quickly through both monetary and fiscal policy.
Yeah.
But we're yet to see what's going to happen in developing economies and the lingering effects of it. But I don't think it'll be of the same magnitude as the Depression.
All right. Thank you. Okay, so my next question is gonna be, since there are a lot of ways to measure the impact of an economic crisis, what do you think are the best economic gauges for measuring a financial crisis?
Well, the traditional ones would really be focused on three things, right? You would look at GDP and its changes. And by definition, a recession is two back-to-back quarters of declining GDP. Depression obviously is of a greater magnitude. You'd look at unemployment rates, which tend to be coincident with GDP as well. And then finally, you could potentially look at inflation as well. Now, those are just three specific metrics. I think looking backwards, you have to see how many months or years it took for the world and or a specific country's economy to get back to pre-crisis levels. You'd have to see what income disparities look like as well. I believe that's an important element. We'd also have to look at, and these are just economic metrics that I'm throwing out as well. You could look at also the debt capacity used by a particular nation in terms of its ability to address the crisis and what policy room it may have going forward. For example, in both the United States and in, well, really Europe and Japan, you're at the zero lower bound for interest rates. It really means that monetary policy has lost one of its tools. You're not going to, it's very difficult to have sustainable interest rates below zero, real perhaps, but not nominal rates. In the United States, we're still not quite there, which means that you're really left with QE, quantitative easing, as a policy tool that you can use in Japan and in Europe as well. But you've taken something out. So I would say that those are some of the metrics. I also don't think that GDP captures the full extent of all of these things. And so that's why I refer to inequality. If we look at the Gini index, although it's not done on a real-time basis, inequality differentials, for example, in COVID, it really blew out in the United States.
I mean, you mentioned looking at market indexes. Do you feel like there's an index that, very accurately depicts the current economic health of a country? For example, Dow, maybe.
No, I actually do not look at market capitalizations as being representative of the economic status of a country for a host of reasons. Number one, I don't think that the economy's composition is mirrored in a stock indice. The United States, 20%, five stocks and 20% of the S&P are driven by technology, right? And yet there are many, many other industries in the United States. The importance of, for example, just basic staple consumer items, right, in those companies. So no, I would not look at that. I think you have to step away and look at more macro indices. There are some leading indicators. Give me a second and I'll recall what they are specifically. But they are, the Fed has developed a list of real-time, there's a term, I'm sorry, it escapes me, real-time metrics that they look at to get a better sense of the status of the economy. And I think that that is a much better way to judge what's going on. GDP lags, employment is lags, it doesn't tend to be coincident. Inflation could be structural or secular, right? So none of those really give you a good highlight of what's going on. Trade may be bad, but trade may not be a terrible index, but it also lags a bit. To answer your question in a slightly different way, why don't I use the stock market indices? I could also make an argument that I may look at foreign exchange rates as well. If I'm using stock market capitalizations, I should look at futures. Futures is a much better, treasury curves, foreign exchange futures, the price of oil, especially for rentier states, that are so oil dependent.
Yeah. All right.
Not one.
Yeah, there are quite a lot.
Yeah.
Okay. Yeah, so, obviously you have been in this field for quite a while. So, has there ever been an economic crisis that you have experienced firsthand? And what was the atmosphere of going through one?
I was at the time, as you know, I'm teaching at Columbia now, but prior to teaching at Columbia, I was a partner at a hedge fund. And so during the 2008-9 crisis, I actually was living in London managing about $3 billion of high yield debt. That debt, that's non-investment grade debt, that non-investment grade issuing companies. That debt traded down about 15 points. So from par, it went to 85, and some went well below 85. And even the bank debt, which tends to be at a higher level of the capital structure and therefore presumably safer, probably traded off by 10 points as well. And so living through that was quite an experience. You had to be cool and collected, quite frankly. You had to understand what the policymakers' intent was going to be. There was a lack of liquidity in the market. We really went to use the term, we went to battle stations in a way. We preserved our liquidity. We did not try to be forced sellers. We spoke to all of our limited partner investors told them what our strategy was, and spent a fair amount of time thinking about the economic policies that could be put into place to correct the situation. Ultimately, we actually ended up being buyers towards the bottom of the market of a variety of bonds, and we came out of the crisis doing well.
Yep. All right. That was quite interesting. Quite
Mhm.
large numbers you talked there.
Yep.
Okay. So we have been experiencing another economic crisis for the past year, and the COVID-19 pandemic, it has left us with a lot of problems. And a lot of economists and news outlets suggest that we might go into a post pandemic boom after this pandemic ends. So,
Mhm.
what are your thoughts on it? Will it be a quick recovery, or will it take some time to gain economic prosperity?
I think it's secular. It's dependent upon what sectors you're speaking of. Sectors that have recovered quickly, technology. We've pulled forward digitization of the economy much faster than we thought. We also pulled forward. Obviously, you're seeing bouts of inflation in a number of industries as supply chains have experienced some degree of dislocation. Lumber prices, semiconductor prices, used autos, all of those things. Oil prices have recovered as well from really lows. Obviously, a negative number, but that was all technical. The negative number, that wasn't going to happen for a very long time. I think that there have been a number of sectors that have experienced a V-shaped recovery, and generally the consensus is that the recovery has been much faster because of the economic assistance that advanced economy governments brought to bear. I want to be careful. I'd like to bifurcate these periods for a minute. The first period is really a recovery plan, right? It wasn't stimulus for the economy. It was basically to address the complete drop off of demand and preserve income and health for people. And COVID is a dual crisis. It's a health crisis and an economic crisis at the same time. Um, so my general view, it looks like third quarter GDP will probably be high, about 6% in the United States, and likely get the United States economy back to where it was pre-COVID. All right, which is that's a remarkably fast economy. Now, having said that, the federal government basically provided 25% all in, including some fiscal monetary policy, 25% of GDP. So that's a lot of money that has moved into the economy in a very short period of time. Japan was around 10%. Europe was about 12%. The smallest numbers that I've seen are about 3 or 4%. It depends upon country capacity. Advanced economies are coming back much faster. Some sectors are not coming back that quickly. It reflects health and safety concerns. It reflects dislocation with respect to people's buying behavior and reticence to perhaps go out to restaurants, in the same way. It's really quite well correlated with immunization rates within a country. The higher the immunization, the more people will get back. So, do I think that we're in a boom, or will we boom? I think we are in the midst of booming right now in advanced economies. It's pretty clear. We're slow. It's going to slow. The curve was really V-shaped. It was very sharp in its increase. It's going to start flattening out by 2022. If we look at the IMF numbers, you're back to a world growing at around 3.5% or so, which is a little bit on trend. It's pretty much trend line at that point.
Hmm. That I mean that
Okay.
Yeah. Thank you for that. All
You
right.
didn't expect me to give you short answers, did you?
No, I did not expect you to give me short answers. It's just you gave a lot of details, so obviously, that's quite good for my project.
Yeah, yeah.
Uh,
Good.
yeah. So, are there any ways a country can prepare for future economic crises? Because a lot of countries mishandled the COVID-19 pandemic in the beginning, which led to a big recession in a lot of advanced economies. So,
Sure.
what are your thoughts on something like managing your economic policies to suit better for a future economic crisis?
I think by definition, economic crisis befalls countries, and they're very hard to predict. You know,
Hmm.
and there's been no economist that I know of who has consistently been able to predict it. You know, and if you always say, like, you've got certain economists that say, well, there's going to be a crisis, and for 10 years they say they're going to be a crisis. Well, at some point over 10 years, there will be a crisis, right? So they're going to be right, but I wouldn't call it that they had a high hit rate. What could countries do? Well, with COVID in particular, I view it as a health crisis, first and foremost. Had there not been a health crisis, you would not have had the magnitude of economic crisis. So countries can prepare from a health standpoint. Okay. That is, that they can have the emergency systems in place, they can react quickly. In the United States, in particular, it became really a point of political division, and I think that that political division prolonged the United States response, and therefore lengthened and increased the magnitude of the crisis in the United States. Had we not seen the political crisis, I believe it would have been addressed much quicker. And the reason I say that is simply because if you look at the new administration, they moved very quickly to implement a number of things such as vaccination, right? And
Yeah.
obviously, we're getting some pushback on that right now in the United States, but for the most part, they've done a good job in handling it. What can countries do? They can prepare their health systems to handle the next pandemic, because there will be another pandemic. There's not a question of it. I don't know if it'll be 100 years in the making, by the way. Okay. And from a fiscal standpoint, what countries can do is, now that they have the advantage of a growing GDP, at some point they need to begin to restore their capacity as a country to economically address the crisis. It may mean that they have to look at those institutions that failed, did not respond quickly, improve them. It may mean fiscally that they have to reduce their deficits so that they have an increase of borrowing capacity in the future as well. So
Hmm.
that is, I think, the only ways that you can actually address this. Um, you know, global debt numbers have gone up materially. They were going up prior to the crisis, and the crisis has made it go up even more. The United States entered the crisis at about 85% debt to GDP and is exiting at about 120% debt to GDP. Big number. Fortunately, interest rates are low enough, and so when we look at the debt service as a percentage of GDP, it's not overwhelming for the U.S.
Like, what about a more general perspective where, the crisis wasn't caused by a pandemic or a war? How would
Mm-hmm.
you deal with it then? What kind of policies would you be making?
Well, let's look back. If we look back at, for example, Asia, right? The Asian crisis. The Asian crisis was a function of the economies pegging to the U.S. dollar, borrowing in the U.S. dollar, and then economic growth slowing, and then the market basically withdrawing capital flight effectively from those countries, right? Um, that I think is a function of each administration economic policy that they put into place. And my argument would be to err on the more conservative nature of it. But it's difficult because you also want to have economic growth and deliver standard of living right to your countrymen. And you don't quite know you're in a crisis until after the crisis, until the middle of it.
Yeah.
So I think by definition it's very hard to prepare. But I believe that being more prudent with regard to fiscal and monetary policy is helpful. That's about the only cushion that I think exists out there, and not allow political capture, unfortunately, of government institutions. You know,
Yeah. Uh, would you say that identifying trends in how economic crises start and end would help countries better have a better chance of preparing themselves? Their
they
causes and stuff.
can, yeah, they certainly they can. But we look at the five crises that you named, and each one, quite frankly, had a different set of causal factors.
Hmm.
9/11 was effectively a terrorist attack in the United States. The Great Financial Recession was really poor lending policies in the United States with regard to the banking system, a lack of regulation, right, which
Mm,
created moral hazard. COVID obviously was a health related crisis. 1997 in Asia was excessive borrowings and capital flows and pegging to the US dollar at a time when economic growth then slowed and there was a flight of capital out of that. Same with Mexico, by the way. Same,
mm,
because you had a crisis in Mexico. And then the Depression was really a whole series of events, starting with, Germany, World War I, and the United States withdrawing lending support for Germany to pay repatriations, and ultimately France and Belgium taking over the most productive industrialized area of Germany, depriving them of further capital to make payments.
mm.
So each one of the five have a different cause. It's hard.
Yeah, but what about their solutions? Like, where
Right?
was raising interest rates a better option for? Did raising interest rates, help solve this? Did try and regulate inflation solve this? What do you call? Is there like a trend that you observe in the
Um,
solutions of these?
uh, yeah, the solutions. Okay, so if we look at COVID, what the policymakers did, what they learned from the 2008 global financial crisis was to move quickly, and if they had to, it was better to err on the mistake of putting too much money into the system rather than too little money. And that is why the world is effectively the world. Advanced economies have pulled out so quickly. And look, the United States putting as much money out into its economy and the world economy as it did is help lifting the world out as well. There's no doubt about that. So I think that the lesson is it may be difficult to predict. You may not have your policy tools, but we've seen that moving big and moving quick is probably the best way to address a crisis when it develops. And then worry about it afterwards.
Hmm. All right. Would you say that the real estate market is often what causes an economic crisis?
Mm, um, well, let me answer your question in two ways. One, I think that the development of bubbles, right? Asset bubbles causes financial crisis. So it could be in 2000, the meltdown of internet stocks, or it could be in 2008. It was a real estate oriented crisis. Today, real estate prices in the United States have gone up materially. In part, it reflects low interest rates, high savings for individuals because they weren't consuming a lot of other things, some demographics with regard to household formation. And the fact is that the Fed, through its quantitative easing, has been buying a lot of mortgage backed securities. And so banks, who are the originators of home loans, really are not sitting with those home loans on their own balance sheet. They're basically selling them to the Fed. So it provides a source of liquidity. While housing prices are up, housing prices aren't quite as high as the stock market is. Do I think that it could potentially cause a crisis because prices will come down? You'd have to ask yourself, well, what is it that will cause prices to crash from a real estate standpoint? I think lending standards are a little more stringent today than they were. And I think that people are taking out 30-year fixed mortgages more than they are variable rate mortgages. And so even when interest rates go up, it may slow uh, uh, household, building in terms of that sector, and or maybe the resale of properties. But I'm not certain that it takes the value of properties down materially, because I'm not sure that there's going to be a lot of sellers necessarily.
Hmm. All right. So you made us write a paper about inequality that exists between income, gender, like the income disparity, which exists because of gender or racial inequality. Do you think that this disparity increases when you're in an economic crisis?
Yeah, there's no doubt. You look at the top 10% of Americans, and I'm not, I don't have the stats down perfectly. I don't know if it's the top 10% or top 1%. They basically made $4 trillion more in terms of the stock market, while the bottom 90%,
Yeah, they
have
lost a lot of
suffered.
money.
Exactly. And so at the end of the day, the income inequality has grown in the United States. And I think that that is a direct result of the financial crisis and or disposable income and or investment portfolios. So yes, I think that it tends to go up during crisis.
Okay, so this is going to be my final question. But how have economic policies changed over the years to better adapt to the current economic climate? And have these economic crises played a role in making these policies change?
So I'll answer your second part first and then your first part second. The answer is yes. Economic crisis has caused policymakers to reevaluate the types of policies that they're using. We have shifted, I think, in again advanced economies from a more monetarist oriented policies to more fiscal oriented policies. The role of government in terms of pulling countries out of economic crisis, the use of government spending and social insurance has played a prominent role in this crisis. That is a very, very different view than we had from the 1970s up to call it 2019. We were much more oriented towards, and I don't want to use the word free markets, but much more oriented to shareholder returns, in the use of the Fed and interest rates in terms of guiding an economy. Obviously, the Fed has really two mandates that they have to follow, price stability and employment. And I think that this crisis has shown we've kind of reverted back to a little bit more Keynesian. Perhaps we've gotten Keynesian plus here, but I think that the policymakers have now switched their focal points, at least the ones that are more forward thinking. There is a group of policymakers, quite frankly, that are mirrored in yesterday's thinking. They believe that by cutting taxes, there's actually a trickle down effect. I can't tell you the number of papers that have been written that dispute that theory. Okay, it's invalid. It does not work.
Ronald Reagan
So
came up with it, right? The trickle down
well,
theory.
actually, a guy named Arthur Laffer did. And in the original paper, if you ever want to take a look at it, Laffer's point was you reduce taxes, and it will be a stimulative effect to the economy. When he wrote it, marginal tax rates were 70%. Okay. So he said, yes, if you're taking 70 cents of every dollar, yes, there's going to be a positive impact when you don't take 70, but you only take 50 cents or 40 cents. Okay. But when you're taking 28% and you reduce it to 22%, the only thing that happens is that the deficit gets larger.
Yeah.
That's it. So I think that the crisis has we're rethinking capitalism. The inequality is making us rethink capitalism. Not that we're moving to a social democracy necessarily, but I think we know that we have these underlying economic grievances that are manifesting themselves in social dislocations, and policymakers know that they have to address it.
All right.
That's my answer for you. Okay.
Yeah, thank you. Just a question, not about my project or anything, but
Sure.
is the poster you have there, Other People's Money? Is that the
It
movie?
is other people's money.
I
Um,
remember watching it.
it's actually signed by Danny DeVito.
Oh, oh my God.
Because a fraternity brother of mine is good friends with Danny DeVito. And when I turned 50, this was many years ago, 12 years ago, my sister asked, who's also friends with my fraternity brother, asked my fraternity brother to get Danny DeVito to sign it. And given what I've done for basically my life, i.e., being in the investment market, it seemed like a very apropos poster for me to have in my office. So I also have, but let's be fair, also have a Fibonacci function.
Hmm.
You know what a Fibonacci function is?
Yeah, the Fibonacci sequence, I think we learned
Yeah,
about.
yeah,
Yeah.
yeah. So I have that in here, and I have a picture of Wall Street from like 1890 or something. So there's all sorts of little trivia in my
That is so interesting.
office. It lets you into my personality.
Yeah.
Yeah.
I remember watching this movie and I was quite intrigued by it.
Oh, I thought it was a great movie.
Yeah. It
Yeah,
was it was quite funny to be honest.
yeah, I agree. I agree.
Yeah, it didn't
Um,
get me into economics, but sort of
no,
accentuated that love for it.
yeah, it came at a time when leverage buyouts were really a novelty item, and so the fact that you were borrowing money to buy this company to basically liquidate the pension fund and sell off the parts of it, and then the pushback. There's a moral story to it too,
Yeah.
but it was a good movie. Yes.
It was a fun watch. Yeah,
Yeah.
definitely.
Are you reading anything that you interesting now, economics or other thing?
I haven't really started reading a paper.
Okay.
I did attend this course for a while, but I mean, that's all. I've been
Mhm.
mostly working on school and this project as a side thing.
Right. Okay.
But if you have any recommendations for me, that would be
Hmm.
great.
I so there's a book by Senator Amy Klobuchar on antitrust in the United States, which I am going to start to read. I bought it because I think it's a pretty interesting topic. Concentration of power basically is, I think, a negative, and therefore antitrust is a positive government policy in most cases. You know,
Hmm.
so I'm going to read that. I also got a book. This one you might like it. This is called 10 Rules of Successful Nations, and it's a Rishar Sharma. Here, I'm holding it up for you. And
All
the
right.
guy was he is basically, I can't remember if he's at Morgan Stanley and all. It's not a very long book, but I think it'll be an interesting book to read because he's a practitioner in terms of macroeconomics and investing.
All right.
I always have books. I mean, I have a library back here of
Yeah.
things that I'm reading.
I like to read too. I was reading the Brothers Karamazov earlier, but I haven't really been into economic literature because
Mhm.
most of that is just nonfiction, and you need to get into that, slowly ease into it. But
Yeah,
I'll get there someday.
yeah, of course you are. I have I just finished teaching this class again. I'm in between classes. I'm teaching in 2 weeks an investment class, and I created a class for the last spring, called International Relations and Great Power Competition, where I talk about more geopolitics oriented than it is economics oriented, but it's really about the issues between the United States, China, and Russia, and how it spills over to the rest of the world.
Yeah, basically, I mean, between China and the USA, it's essentially a Cold War, which is happening. I mean, a trade
Correct.
war, as it's been dubbed. So it's quite an interesting thing seeing more and more ideas being sent to China for manufacture, while the US is so anti-China. We'll see how it goes, but it's a bleak future to be honest.
It will unfold over a number of years. It's not, we are at the beginning of it, quite frankly. I wouldn't even say we're in the middle of it yet. The United States there's a lot of things that both countries need to do. Ultimately, the interesting aspect is they have to, in this world, you can compete, and that's okay to compete. You've got to also cooperate on a number of issues.
Exactly.
You know, and you got to avoid confrontation. So we'll see how all of this rolls out, how well the politicians handle it.
Hmm.
Well,
right?
good. I am good luck on the project. I'm happy that I
Thank you.
could help you out. I hope that my answers were thorough enough for you.
Yeah, they were quite thorough. Thank you
Okay,
so much
good.
for this. All right.
You're more than welcome. And good luck, and let me know how it goes. All right.
Definitely. Definitely.
Good.
Thank you so much. All right.
You're welcome.
Goodbye. Good night.
Bye bye.